Elizabeth is a business economist in the Economic Research Department here at the Federal Reserve Bank of Chicago. She monitors regional economic conditions through district-wide roundtables and contributes to and edits the 7th District's Beige Book submission. She's a contributing author to the bank's Chicago Fed Insights and Fed Letters series and the Chicago Fed's quarterly agricultural publication. Please join me in welcoming Elizabeth.
Okay, thank you. Thank you. Hi, everyone, and thank you for that kind introduction. It's good to be here with you today. I'll be giving a little bit of history on Illinois' economy and tax system. My goal is to describe what Illinois looks like in terms of its population and production, and what its tax system looks like in relation to other states in the country. I have been told I'm the only one showing you a bunch of charts today, so we're going to get through those. So to do this, we'll be looking at graphs of Illinois' state and local revenue and expenditure data as compared to that data for other states. We're looking at that information combined because I don't really want to get into the intricacies of state versus local differences between different states. A fun fact probably a lot of you know is that Illinois has by far the largest number of localities in the country, and it's not even really close. So to begin, let's take a look at some of the basic demographic and economic information for Illinois. Okay, I'm going to spend kind of a long time describing this chart because many of the charts in this presentation look like this. This is Illinois' 5-year population growth. Illinois is in the red line here, as compared to the 20th, 50th, and 80th percentile of states in the United States. To give you some context, the 80th percentile line means that 10 states are at or above that line in terms of population growth. So 10 states in the United States grew above 5% in the most recent year. The median is the 50th percentile, and 10 states grew at or below the 20th percentile line, so grew a little bit below 0% in the most recent year. You can see as of the most recent data, Illinois has had negative 5-year population growth, and that's been true since around 2016. Something I say quite often in my job is that Illinois is a slow growth state. This chart shows population growth, but it's also true of employment growth, which is in Illinois is also fairly steadily slower than the nation. There are a couple of reasons here. Industry mix is one of the ones I point to quite often. So Illinois has a slightly higher share of its employment in manufacturing than the nation does, and manufacturing grows a little bit slower than other industries in the United States. And then there's also an amenity argument for Illinois' slow growth from somebody at the Kansas City Fed who doesn't pick out Illinois in particular, but basically says people don't really move to places with summers as hot and humid as ours are and winters as cold as ours are. So we just get less population growth for that amenity reason. One other thing I'd like to note here is that Illinois and the nation are both aging. So Illinois and the nation both have kind of similar median ages. It's 39.4 years old for Illinois and 39.1 for the United States. But the median age in Illinois rose about 4 years in the past 2 decades, since 2004, while the median age in the US rose only about 3 years. So Illinois is aging faster than the United States is and growing a little bit older. So setting the baseline here, Illinois has slow population growth and is getting older than the United States a little bit faster than the United States. Let's take a look at the state's production. So this shows Illinois' gross state product, which is basically a state version of GDP per capita. While Illinois may be slow growth, it's also what I would say pretty prosperous. This is GDP per capita for the state compared to other states in the nation, so it lands around the 80th percentile of other states in the nation. And Illinois' personal income per capita shows the pretty similar patterns. So although Illinois is prosperous, its slow population growth equates to relatively slow total GDP growth. So Illinois' total GDP grows slower than the nation pretty regularly. Okay, those are the 2 main economic facts about Illinois we're gonna use for the presentation. Now I'm going to talk about 3 main sources of revenue for Illinois. I'm going to talk about the income tax, sales tax, and property taxes. I'll just mention here that there's another source of funds for state and local governments, and that's federal intergovernmental revenue. Illinois receives relatively low levels of federal transfers per capita in the state, frequently landing at or below the 20th percentile compared to other states in the nation. So we receive low levels compared to other states. And that's just because we have such a high population and because we're relatively prosperous population. Okay. So this is the first of the 3 tax streams we're going to look at. This is a chart of personal income tax revenues. I'm going to take a moment here to note that this does not include corporate income tax revenues. Corporate income tax revenues per capita in Illinois averaged about 20% of total income tax revenues between 2012 and 2022. They aren't included here. Including them kind of just shifts the chart up, but doesn't really change any of the directions very much. You can see in this chart that Illinois' personal income tax revenue was for a long time a little bit below the median level. So that red line is a little bit below the 50th percentile line compared to other states in the nation. Now they're a bit higher than they used to be, and in the most recent data, they're a little bit above the median. Illinois has a flat personal income tax rather than one with a graduated rate. This means that every person who pays income tax pays the same rate, and you can see the changes in collections that happened with these circles. Changes in collections happened with rate changes in 2011. We went from a 3% to a 5% personal income tax rate. In 2015, where we went from 5% to 3.75%, and in 2017, where we went from 3.75% to 4.95%. Corporate income taxes changed in the same years, in the same directions. I'm not going to read all those numbers to you. With a higher tax rate than previous years, so right now, again, we're at 4.95% compared to 3% in 2010. We have a relatively wealthy population and a flat tax rate. The end result is that revenues are higher than the median state in the United States. The big takeaway from this chart is that while income tax revenues per capita were below the median for a long time, in recent years they're a little bit above the median. This is a look at sales tax revenue per capita. Between 1980 and 2020, sales tax revenue in Illinois has been lower than the 80th percentile, hovering near the median level, although a little bit above it. Sales tax revenue can fluctuate depending on the rate and consumption in the state. So this chart has a bunch of moving parts in it. We're going to talk about both of those parts. Illinois' sales tax rate is 6.25%. This has been true since 1990. Localities in Illinois, though, can levy their own sales tax rate on top of that. For example, I live in Chicago. My sales tax rate is a little bit above 10% because of some home rule taxes and the transit authority tax that we get in some of the counties in northern Illinois. The takeaway from this revenue chart is that sales tax revenues per capita in Illinois are above the median, so we get more revenue from sales tax than other states do. But one key part of Illinois' sales tax structure is that it's largely a tax on goods and not services. I'll just point out real quick, the Civic Fed has a very interesting piece that I'm sure many of you have read on this part of Illinois' sales tax structure. Illinois taxes fewer services than other states in the nation do. Basically, this means that the base of what is taxed is smaller than if Illinois did tax services. And to illustrate that point, we're going to take a look at the nation's share of goods versus services consumption. Okay. This chart shows the overall share of consumption that goes to goods, which is the red line, versus services, which is the blue line. It goes all the way back to 1960. In 1960, about 55% of our consumption was of goods and 45% was of services. This switched in about 1970, and the difference has grown larger since then. You can see some fun data quirks like in 2020, the pandemic, when people couldn't consume as many services, so we stopped consuming things like movie theaters and amusement parks and things like that, but we also stopped consuming very basic services like going to the dentist. A lot of things just kind of shut down, and people substituted some of their consumption of services for goods, and you can see that jump up in the red line there. Basically, what this chart shows is that the base of what is taxed in Illinois, the share of consumption of what is taxed in Illinois, is smaller than if Illinois did tax quite a lot of services. And yeah, the fact that services are not taxed in Illinois just means that that base is smaller, and some surrounding states tax services, and so they have different sales tax rates and consumption levels. Okay. Now turning to the last of our 3 tax streams, this is the property tax. The level of property tax revenue per capita relative to other states in the nation has, more than any of the other charts in this presentation, always been pretty consistent, always around the 80th percentile. That's been true since around 1995, and in recent years, we're even higher than the 80th percentile. Overall, property taxes are a fairly unpopular tax. They're lump sum, they're fairly transparent, and they don't change based on behavior like a sales tax or an income tax would. Illinois' property taxes paid as a percentage of owner-occupied housing value ranks at number 1 in the country, according to 2023 data, and this gives Illinois an effective tax rate of 1.83%. That's according to the Tax Foundation. One of the reasons property taxes are pretty high in Illinois is that local governments in Illinois are responsible for a lot of our K-12 education funding. So the Illinois state government funds only 24% of our K-12 public education costs. And that means that local governments depend on the property tax, which is a fairly stable source of income, to pay for that large cost. The takeaway from this side, basically property tax revenues have always been high compared to other states in the nation back to 1960. Okay, and we can see that Illinois' tax burden is fairly high as well. This is a map from the Tax Foundation, authored by one of our speakers here today. This is a measure of tax burden, so this is calculated as state and local taxes paid as a percentage of that state's share of net national product. So what the residents of that state pay as a share of product. Illinois' tax burden in 2022 ranked number 44 in the nation at 12.9%. This is compared to other Midwest states in the Chicago Feds District. Steve mentioned which states those are, but Michigan is number 5, Indiana is number 14, and Wisconsin and Iowa are number 32 and number 34 respectively. Comparatively, you can see that a state like New York, which ranks at number 50, has a tax burden of about 15.9%. So Illinois' tax burden is fairly high, and the income, sales, and property taxes collected are all above the median, especially in recent years for the nation. So let's take a look at what state and local expenditures look like. Okay, this is a look at expenditures per capita, excluding something that we call insurance trust expenditures. Insurance trust expenditures are retirement benefits, workers' compensation, and unemployment insurance. You can imagine this chart shows a proxy for expenditures on current services. Illinois is close to the median here and spends what looks like the median level of expenditures per capita. This bump up I'll talk about a little bit later is basically a data quirk. I do not split this data by state and local expenditures, but let me briefly describe what it looks like when I do. So if you look at just state expenditures, Illinois hovers much lower, close to the 20th percentile line. That's again because a lot of K-12 education is paid for by local governments. So including local governments in this expenditure measure increases where the state lands among other states. The takeaway here is that Illinois' expenditures on current services is around median for states in the nation. Now this is a look at the reverse of that chart. So this is expenditures on insurance trusts. Again, this is unemployment insurance, workers' compensation, and retirement benefits. You can see here that Illinois lands above the 80th percentile pretty consistently, and at least since the early 2000s. I'm thinking of this as a proxy for state and local expenditures on services that we received in the past. Okay. And this is the final slide. Overall compensation includes compensation to retirees and compensation to current employees. Compensation to current employees, again, is a proxy for the current services that state and local governments provide to their citizens. Compensation for retirees, we can call a proxy for services that people once received. You can see that the share of retiree compensation in Illinois is above 30%. That means that every dollar that Illinois pays in compensation is paid to retirees. And that's well above the 80th percentile for other states in the nation. Other states in the nation, the 80th percentile doesn't even reach 30%. This is in part due to the first chart that I showed you. Illinois, again, is a slow growth state. Its population is very slow growing. You might imagine that for states that are very quickly growing, they are paying much less in retirement benefits as a share of overall compensation than Illinois is, because our population used to be larger than it is now. Okay. I'm going to combine all of the things that we talked about today. The first is that Illinois is slow growth and fairly wealthy. Illinois gets really low federal transfers because of those two facts. And Illinois pays relatively high taxes compared to other states in the nation for their income, property, and sales tax. Illinois' expenditures on non-insurance trusts, again, kind of a proxy for current services provided to citizens, are around the median for states in the nation. But its payments to services received in the past, again, this is retirees, are well above average. I have a Slido thing here for questions. I hope that this gives you all a good idea of Illinois' tax collections. I'm happy to take questions about Illinois' economy, the Midwest economy, and any of the information that I showed you all today. Okay, so we have one question. What kind of personal income, what kind of personal income tax structure would bring Illinois more in line with averages nationally? So I think that of all of the taxes, the personal income tax actually was the closest to the median. Property tax is certainly well above the median. Sales tax is well above the median for per capita revenues. Our personal income tax revenues, you could see with the rate changes, kind of immediately bumped up revenues per capita. And so the flat tax is did not immediately send us away from kind of the median per capita revenue. Some states have graduated income tax rates, and that might kind of bring things more in line with other states in the nation. Okay. These are hard to open, hold on. Okay, two major growth factors in Illinois' growth in the 20th century, that's international and internal immigration, seem to be ignored or discounted when trying to understand population shifts in the 21st century. Why? So in terms of when we're talking about immigration to Illinois, when we're talking about population growth, I can talk a little bit about this Kansas City Fed paper that talks a lot about the amenity argument for people moving to different places in the United States. And basically quite a lot of states that have, there's a couple of things that it looks like people really like. Mountains is one of them, actually. So people really like moving to mountainous areas. And this kind of like more temperate climate. Illinois, especially compared to other states in the Chicago Fed's district, certainly other states in the Chicago Fed's district are also fairly slow growth. I'm thinking of Wisconsin, I'm thinking of Iowa are fairly slow growth. That's also the same kind of industry mix argument and the same amenity argument, which is that Iowa has the same kind of level of intensity for weather as Illinois does. Okay. What can I share about distribution of tax burden by income group? To what extent is Illinois more or less regressive? So the income tax, being a flat tax, is less of a progressive tax than something like a graduated rate would be. And then there's an argument, again, from the Civic Fed in their paper about the sales tax on services versus goods, which basically says that expanding the sales tax to services in Illinois, which wealthier people consume more services, would make the sales tax more of a progressive tax. That's the information I have about that.
Do you want us to read out the questions, make it easier for you?
That would be great.
Okay. All right. One question is, some research examines tax burden on the middle class. Can you comment on your perspective on distribution of the tax burden on income?
Yeah, so I think like the previous question said, two of our taxes are the sales tax, which is a tax on goods in Illinois, and then the income tax, which is a flat rate, are both less progressive than other versions of that tax would be on lower income communities.
Given that this all paints a pretty grim picture for Illinois, what do you think are some of the obvious tax areas worth examining for policy change?
Yeah, the grim picture is, I mean, the population growth thing is a little bit like Illinois' destiny. Those charts shown at the very end, which show the percentage of compensation that we pay to retirees, that kind of thing, is large part in part because of our population growth. I don't have personally, as a Chicago Fed employee, recommendations for policy changes, but certainly I think this is in part just kind of like Illinois' situation because of its industry mix, because of where it is in the country, because of its amenity value, that kind of thing.
Okay, one question touches on education level. So the question asks, do you have any information on the education level of the population, how we rank in education, or how our population is more or less educated than other states?
Yes, so I would imagine, I don't have super recent data, that type of information usually just kind of follows metro area lines. And Chicago is obviously major metro area in the Midwest, and it's kind of the major metro area for a lot of states surrounding Illinois. It is in some part kind of like the headquarters for manufacturing. So Chicago doesn't have a higher share of manufacturing necessarily than the United States, but it is kind of the hub for a lot of manufacturing in the Midwest, and so follows those trends a little bit closer. Chicago and metro areas have higher education than average, and rural areas typically have lower education than the average in the United States. But I don't know where Illinois ranks compared to other states.
All right, putting weather and climate aside, what are some of the strategies to stimulate more population growth through tax incentives, tax structure, or public investments in amenities?
I do not think I have an answer for that question.
All right, there are a lot flowing in, so I'm just going to go through them. Do we know to what extent Illinois' relative abundance of fresh water will impact future economic growth?
That's definitely an interesting question. We have, I think there's a lot of people who suggest that will make it so that the Midwest becomes, eventually everybody will move to the Midwest because that we have fewer climate, not as many we don't have hurricanes, we don't have earthquakes, and fewer kind of climate disasters. I think it will be interesting to see if that happens. It seems right now that that's not where the trends currently, where people are moving to. But it's definitely an interesting question that, that might be a good resource for us going forward.
Okay, going back to sales tax, if sales tax on services were to become law, would the rate of sales tax on goods stay so high? And would the sales tax on services automatically be the same rate as the existing tax on goods?
That's an interesting question. I know a little bit about Iowa's sales tax on services, so I can talk about that. The theory behind sales tax on services basically says, if you expand the base, so if you expand the base from taxing just goods to taxing goods and services, you can lower the rate either on the sales tax or on other taxes in the state. I will say Iowa's sales tax, which is a tax on goods and services, is also 6.5%, which is what it is in Illinois. So I'm not totally sure that we could say right now what that would affect, but that's the theory behind the sales tax.
All right, given that the state determines income tax rates, but local governments determine property tax rates, what mechanisms might you suggest that would create a better balance?
That's an interesting question. I think, so I will say in my research, it showed that the state of Illinois pays only 24% towards public education funds in Illinois relative to local governments. So local governments pay for a lot of K through 12 education. And I think that might be the lowest level of all states in the United States that the state of Illinois pays. So I think just that's an interesting thing to look at, why Illinois might pay such a low percentage of that. And that might lower the burden on property tax.
Okay, shifting to the topic of debt, do you have any research on how Illinois' debt compares to other states?
I don't, not for this presentation.
Okay, that's fine. All right, and then on the topic of population, so there's a couple more questions about population. One is the population growth or loss evenly distributed across the state of Illinois, or is it concentrated in certain areas or within certain demographics?
I don't have hard data on that. I'm sure that it is not evenly distributed across the state. I know that Chicago's population is also not like growing wildly. And I will say Illinois actually grew a fraction of a percentage point between 2023 and 2024. That's a 1-year population growth rate rather than a 5-year population growth rate. And it was definitely less than 1%. But an interesting thing to look at.
Yeah.
But no, I have no data on that.
Okay. And then other states with global cities and regions, such as New York and California, have high relative tax. We have a lot of density and expenses within that economy. Is there something we can say about GRP relative to tax burden? Does that question make sense? I don't know.
I think if you're talking about GDP relative to tax burden, so that tax burden calculation is the amount of taxes paid by residents of the state relative to net national product. So Illinois ranks among the high, like number 44 of all the states in the country, which is much higher. I will say California in that graph or in that map, and New York ranked higher than Illinois did. I'm not sure if that answers the question, but.
Okay, well, many great questions. We might need like another Federal Reserve Bank paper on all of those things. So thank you everybody for submitting amazing, very intelligent questions and very tough to answer. And thank you, Elizabeth.